Hello, ladies and gentlemen. Good morning. I'm Joseph Novichkov, Senior Trading Manager for GDM. With today's outlook, actually we're starting with the most important news yesterday. The euro dropped with another 300 pips yesterday, heading for a 6-weekly decline against the dollar before an election in Greece. This weekend, that may shift power from Minister Antonis Samaras to his anti-austerity opponent. Now, the euro also slid against all but 3 of its 16 major peers after ECB President Mario Draghi told reporters in Frankfurt yesterday the central bank will buy 60 billion euros, that's approximately 68 billion US dollars, a month of public and private debt until September 2016. The euro has more downside as the monetary policy divergence will likely become clear with the Fed meeting next week, which is an important event we are going to follow for you. Australia's currency slid below 80 US cents for the first time since 2009 after the European Central Bank expanded bond purchases. And of course, the other important news, Denmark monetary authority cut interest rates to a record. Adding to speculation, the Reserve Bank will lower borrowing costs. Traders see a 47% chance that the Royal Bank of Australia will cut rates at this year's first policy meeting on February 3rd, up to 25% odds on January 16, according to overnight interest rate swaps. The Aussie fell 0.5% to 79.88, set for a 2.8% weekly slide after dropping to as low as 79.65. The New Zealand dollar also declined, but only 0.1% to 74.93 US cents, falling for a 6th day. Denmark sent hedge funds and other speculators a clear message yesterday, daring them to test the full force of its monetary arsenal at their own peril. The central bank signaled it is ready to step up currency interventions and continue cutting rates to stamp out any lingering speculation it may be unable to defend its euro peg. Trader flows suggest the central bank was also active in currency markets yesterday before the rate cut. Imagine that. Oil, on another hand, in the commodity sector, unexpectedly rose yesterday after the death of King Abdullahof Saudi Arabia, the biggest producer in the Organization of Petroleum exporting countries. Futures rallied as much as 3.1%, also in New York, and 2.6% in London after the Saudi Royal Court announced the death in a statement. Crown Prince Salman bin Abdulaziz will succeed Abdullah on the throne. The kingdom, the world's largest crude exporter, led OPEC's decision to maintain its oil production quota at a meeting in November. Moving to gold, it fell to trim a 3rd weekly gain as investors wait for the first outlook for U.S. interest rates after, of course, the European Central Bank, as we already mentioned, expanded stimulus. The price declined 0.6% to 1294.66 an ounce this morning. That's the 14-day relative strength index that held above the level of 70, which is signaling, of course, a reversal. And now for the major events in today's economic calendar, we're looking at Markit Manufacturing PMI for Europe and U.S. and the most important and most volatile news. At 13:30, the Central Bank of Canada will release the numbers for the Consumer Price Index. That's all from me for today. Thanks a lot for being with us. Stay tuned. Bye-bye.